Welcome to Money Talks, a series covering a range of financial topics like budgeting, understanding credit, planning for retirement, and so much more. It's all about helping you feel confident in your financial future. Hi, I'm Lila. In the last episode, we took a look at credit cards. This time, we'll take a deeper dive into the larger concept of credit. We've all seen offers of buy now, pay later, and I can say at times they've been pretty alluring to me. But they may not always be the best choice for your financial future. Used properly and deliberately, however, credit can be a foundational tool to achieve better financial health. Before we skip too far ahead, let's first talk about what credit is and how you establish it. Credit is the ability to borrow money with the understanding that you'll eventually pay it back. Credit can be used for everything from relatively small credit card purchases like groceries to much larger purchases like cars, college tuition, homes, or even an apartment rental. Credit comes in two varieties: fixed credit and revolving credit. Fixed credit has set terms. You borrow a certain amount of money that you'll pay back over a specific time frame. Car and home loans are common examples. Revolving credit is much different. Instead of having a set term, revolving credit continues until you stop using the account and it is closed. If you've ever used a credit card, then you've used revolving credit. By using a credit card to buy, say, a pair of shoes, you're borrowing that money with the promise you'll pay it back at some point in the future. Now that we've covered the basics, how do you get a loan or a credit card? Often it comes down to your credit score, which financial institutions use to predict the likelihood you'll repay the loan. Credit scores typically range from a low of 300 to a high of 850. The higher the credit score, the less risky the loan will be considered by the lender. Yeah, but who calculates your credit score? You might be surprised to learn that lenders aren't the ones calculating the scores. Lenders request credit scores from one of three credit bureaus, whose sole purpose is calculating credit scores. How do those credit bureaus do it? By looking at an array of factors including how much money you owe, whether you've had late or missed payments, the length of your credit history, and how much new credit you've obtained. Maxed out credit cards, high overall debt, bill payments made 30 days late or more, debt settlements, foreclosures, or bankruptcy all negatively impact credit scores. Loans can also be denied because you don't have a credit history. Pop quiz: do you know your credit score? You may have a guess, but you can find out your exact score according to each credit bureau and for free. By now, those of you without credit are probably shouting, "How do I get credit if I don't have a credit history?" It's sort of a chicken or the egg situation, but don't worry, there are several steps you can take to begin building your credit history. First, if you already have a checking or savings account with a bank or credit union, that institution is more likely to approve you for a loan. Another way to build credit is by making on-time payments with a secured credit card. With a secured credit card, you place money into an account and that money just sits there. It's essentially insurance. If you don't pay your bill, the company can pull funds from your secured credit card to cover the balance. A co-signer or co-applicant can also help you obtain credit. Usually a parent or guardian, co-signers with good credit will improve your chances of approval. A good to excellent credit score really can be a game changer. Remember those loan terms we discussed earlier? A good credit score means you're more likely to get the best rates and terms. In other words, you'll pay less for the loan over time. Conversely, poor credit leads to less favorable terms such as higher rates or a larger down payment, even if you are approved for the loan. Focus on those small steps you can make to improve your score. It will pay off in the long run. Thanks for joining for another episode of Money Talks. There's a lot to consider when it comes to credit, but we hope this brief overview sheds some light on the topic. Ready to learn more about credit or other financial topics? Visit cellco.org, where you'll find financial education blog articles, videos, and downloadable worksheets. And as always, if you have a subject or question you'd like us to cover, let us know.